Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 27th of October. And this is your last day to enter to win a free 1-year subscription to MarketClub and a Wi-Fi tablet. So enter online on our blog and I think you'd be glad you did. Here's the question. Is this rally for real and should you trust it? The Dow is shaping up to have its biggest ever monthly gain for October in the history of the Dow. The question traders have to ask themselves, is this for real and should I get long? Everything was sparked off late last night when the powers that be in Europe said they thought they had an agreement with the banks to take a 50% haircut on their bond holdings. To put it in simple terms, if you have something worth $10 yesterday, it's simply worth $5 today. And that's a relative term as there's no real trading value for these bonds at the moment. The sharp upward move in October came as a surprise to many professional traders and hedge funds alike. Today's action was largely a squeeze play with the shorts getting squeezed out of their positions, forcing them to buy back at higher prices. Now to get back to our initial question, should you trust this rally in the market? According to our trade triangle technology and the longer-term trends to track, the answer is not at the moment. Our long-term trade triangles on all the indices are still negative. Somewhere along the line, this will change and we'll either get a signal to resume a short position or to reverse and go long. We will wait to see the outcome of this current move and how it affects our strategy and trade triangle technology. Now let's go to the charts and see how we can create and maintain your wealth in 2011. Okay, we'd go to the portfolio manager as we normally do. And this is quite a day. You can see the big move up here in the S&P 500. Clearly, this is a very strong day. We've had an incredible rally in October. I would say probably, well, it is the biggest rally in the history of the Dow, so this is probably the same with the S&P 500. Now, the question is we have a lot of work over the top of this market still, and I think that's going to be an important thing to look at. Now, putting our trade triangles on here, you can see that our monthly trade triangles are still negative. Our weekly trade triangles kicked in at 1220, so right here. And what we recommend trading when you trade with this type of scenario, and I explain it very clearly so people who are watching this video, you'll understand. If you have a monthly trade triangle short, and that's where it came in right here at 1258.07, and then you get a weekly buy, you cover that. In this case, it's 1208.47, so you would have made a nice profit there, and you would have gone short again here at 1136, and you've got long here at 1220, so that would have been a loss. But you'd be out of the market right now, or you'd be short the market. However, the monthly trade triangles are the key, in our opinion, in terms of the major trend. Now, even though you've had a tremendous rally, and I know that if we put moving averages in here and a couple of other things, people are going to say, oh my God, it's just like, amazing that the moving averages are turning up and so forth. And we can put moving averages in here. It's a lot of people look at simple moving averages, and you can see that the moving averages, yes, some of them did turn up. The longer term 200-day moving averages, this one right here, so we're just on the top right now. It's flattened out, as you can see. I would say let's just give this market a little more time. I don't think it's too early to get people. We've gone from total disaster in the world markets to total euphoria in a period of 21 days, 27 days. So I would be a little bit hesitant of rallying after this market at the moment. So let's go to our next market. And also, by the way, let's put our Donchian trade channels. And as you can see, we're way out of this channel right now. The market, as we talked about, is heavily overbought, which is no big deal. We are higher on the MACD, so I would say don't follow the market right now. Just be on the sidelines waiting for our trade triangles to kick in. Let's go to our next market. In the next market, it's going to be silver. Now, silver, we did put in a green weekly trade triangle, which basically said be neutral. If anything else, shorter term traders could have taken this at 33.01. It's 35.21. You can see we're moving up. If we put let me just take this off again because we've got a lot of lines on here. Let's just take our Fibonacci retracement level. And if we go from these levels here, scope it down, we said I think we said in our comments today, right around the 36.77 is a 61% retracement. We're very close to that, 35.22. So we're about $1.50 away from that level. I would say the silver market's totally different from the gold market, and we've talked about that, and we'll look at the gold market right now. The gold market looks much healthier in my opinion, because all of our trade triangles in the gold market remain positive. Even today, we are still higher. We're climbing up. We're talking about going up to the retracement levels on gold of 1777, which is a 1770 rather, which is a Fibonacci key level, 61.8% retracement level, which is right around these levels right here, and then possibly hitting the $1,800 level, which is going to be a big psychological number. Now, I don't think it's going to be possible that we're going to see the gold and everything else go up, and for the equities to go up. Something's got to give here. And I think given the fact that we have all our trade triangles are green, we've been long-term bullish on gold from 1430. It's a consistent theme we played. Our weekly, again, kicked in right at these levels, 1691. So it's got about $50 profit in that right now. So again, this is intermediate term trading. You trade in the direction of the long term. If you can also use daily if you're a shorter term trader. If you're not clear on how we trade, give us a call and we'll send you out the rules of our trading with a trade triangle. It's very, very simple, but you can see the daily kicked in right at these levels here, which is 1648. That's got almost $100 profit. It doesn't always work out that well. There'll be some choppy action, but you want to trade with the major trend at all times. It's the key to being successful. And if you look at the markets are overbought, they can stay overbought for quite some time, as we've said before, and this is looking positive too. So I think we're looking at this market heading to the $1,800 level quite quickly. So let's go to our next market. Next market we're going to look at is going to be copper. We want to include copper simply because it's an industrial metal. It has a reflection. And the one thing I noticed in copper that I wanted to bring to your attention is this. And I'm going to put my telestrator on to show it to you. So here we have the market creating, basically, we've talked about this before. I'll take that off. I'm sorry. We're talking about a double bottom pivot point. So we take this number here, 350 down to 310. This gives us 40. So we should be looking somewhere around these levels here as a target zone, somewhere around the 390 level as a target zone. I think that's reasonable to say, and also you've got these previous lows that sort of come in right here. So I think you'll be looking at a target zone. So the momentum is clearly up in copper. However, our long-term indicator, much like on the indices, is still down, indicating that the longer-term trend is down. And if we simply put our, let me just take this off for a second. If we put our trade triangles in, you can see the monthly came back way back here at 413, and that's on the 5th of May. So it's been pretty negative for quite some time. If you put our weeklies in, you can see how we traded these markets, covered it, got short again at 433, bought it at 414, got short here at 394, and covered it right here. So again, the last signal was 346. We were short from 394, so there's another nice profit. Again, trading with the triangles puts the odds in your favor, and that's all you want to do in trading, is have the odds in your favor. So generally speaking, this market looks like it wants to go higher, and it's reflecting the excitement, I should say, in the equity markets right now. But is it going to hold? That's the question. So let's go to our next market, and this is crude oil. Crude oil, interestingly enough, did not participate in today's move. Again, we've got a longer-term negative triangle. Intermediate is mixed. You can see right here, 87.48. So if you're a intermediate-term trader, you should really kind of be out of the market. If you're a short-term trader, you want to be trading with the weekly and the daily, as this is a futures market. And much like copper, you can trade the weekly and the daily and time your trades, or just trade with the weekly. It just gives you a thing. But to really filter your trades and make less risk, trade with all three. It's just a better way to go. It gives you a much better picture of what's happening. But this is the crude oil still the crude oil still continues to be, we talked about these moves down It's a little bit higher. We may have made a turn here, but it's still too early in my book to turn the monthly trade triangle into a positive. So let's go to the next market. In the next market we're looking at is the dollar index, which really took a hit today. And we were surprised, but this is a big one. We traded down to 74.93. This is real time. We're back now pretty much to where we were back in these periods. I don't know if it's going to go lower or not. Our longer term is long from 76.61. So if you're a long-term trader, you can come in here. You can actually buy it much lower than our original platform. The weekly said to be out at 76.79. So you see, if you get it, if you're using the monthlies and the weeklies for the dollar index, you would have gotten in at 76.61, and you would have been out at this level here, 76.79. So that's really, actually you would have gotten in, the last one, 74.76 out here, and you'd be pretty much out of the market because this is conflicting with the long-term trend. So again, really kind of surprised we've seen this market come down as much as it has. There really has been no support. Probably this level here, the 74 level, should be where it should find some sort of support, but we'll see. But today is generally euphoria right across the board in these markets. So let's wrap this up. Actually, let's look at the Reuters-Jeffries CRB index, which is the last market we want to look at. And the Reuters-Jeffries index basically has rallied back to an area where it should find some resistance, because this is a Fibonacci retracement level, and we looked at the Fibonacci retracement was 323.12, and we're pretty much there right now. So again, longer term, monthly is down. The weekly trade triangle from 317 is positive. So again, excuse me. Again, the longer term trend is saying that the trend is down. You can see these lower lows, lower lows, lower highs, lower highs. If this market turns around, and that's a big question, we will definitely look to go short this market because it's in keeping with the longer term trend. But generally speaking, you can draw a trend line from the highs that we have recently seen, and we go from the highs here, just scope that further forward, and we're getting pretty close to an area where the market should find some resistance. And again, if you look at just a simple Fibonacci retracement, and I'll take these off here and make it simple, just a simple Fibonacci retracement, which I mentioned before, which was the 323 level. You can see we're right in that zone right now. So let's see how this plays out in the next day or two, but certainly the market's doing very well. It's higher for the week and higher for the month so far, as are most of the markets. So hey, this is Adam Hewison. Thanks for stopping by. I'll be back here tomorrow at the same time, 1 o'clock, so stay tuned for that. Also, if you haven't entered, if you're not a member, if you'd like to try a MarketClub out for just $8.95, you'll be automatically entered into winning a 1-year subscription to MarketClub and a HP